What's up, YouTube family? I'm coming to you with another video, giving you some tips and ideas on how to improve your credit score and improve it quickly so that you will stop having to pay high interest rates and losing money when you should be gaining money. There are so many ways out there where you can gain 100 to 150, sometimes even 200 points on your credit score in less than 30 days. Stay tuned, we're going to talk about all of that coming up next. Hello everybody, my name is Paul Zachary Shelton Jr. and I'm the Chief Investment Officer of Warwick Advisors. We are a wealth and investment management firm located in Orlando, Florida with clients all across the United States. If this is your first time coming to my channel or seeing one of my videos, I ask that you please hit the subscribe button. Please ring the bell so that you can get a notification each time we upload a new video. And also please like and share this video. It does me a great service because it helps me increase the financial literacy of our globe. Before we get into today's topic, I want to offer to you a free financial planning cheat sheet. This cheat sheet will give you a snapshot of your financial health as it is currently today. It would also give you a base and a footing that you can use to increase your overall financial health as well as your credit score. In addition to that, I'm going to throw in a free asset allocation that you can use to invest in today's current investment landscape. So let's go ahead and jump into today's topic, increasing your credit score. So there's a handful of things that I think you should do to increase your credit score and to get started on those things immediately to start seeing a change in your credit score over the next 30 days. I know a lot of people have gone through very significant and hard times right now as of the coronavirus pandemic. So I wanted to provide some education and some knowledge on how your credit is treated, how you can enhance your credit, and some of the things that I've done personally for myself and some of the things that I've seen just over the course of my career as working as an underwriter in a mortgage company and reviewing credit reports on a daily basis. So the first thing I always advise is know your credit score and know what's on your credit report. You can sign up for a free credit service. There's so many of them out there. Some are better than others. And I'm not going to endorse any one over the other one, so I'll let you do your own research on that. But you can sign up for some credit agencies, or I should say credit services, that will send you a free copy of your credit report. Now, I do advise, don't look at that too often. Even though when you pull your own credit score, it's called a soft, inquiry as opposed to a hard inquiry if someone else is pulling it, like a credit or a loan company or anything of that nature. I still advise, don't pull it too often. Only look at it quarterly or semi-annually or something like that. You really want to pull your own credit score so you can know all the line items that are on there. Know what your score is, know where your goal to get your score to be so you can qualify for the things you're looking to qualify for, whether it's buying a house, buying a car, or anything of that nature. Go through your credit score line by line. Look at all of the credits on there, everything, all of the open line of credits, and even look at anything that has been closed out. Make sure your address is correct on the credit score. Make sure your address history, your employment history, everything that you can have access to on that credit report. Please go through it, please check it, please verify that everything is correct on there. There's so often that identity theft takes place and you won't even realize it. There may be something very small on your credit report that may look familiar. It may look like a charge card or something that you may have had in the past, but it really doesn't belong to you. It may belong to a niece or a nephew or someone else in your family or someone that you may not even know, and it causes Thanksgiving to be very tricky and uncomfortable. So needless to say, it's very important to know your credit score, check your credit, know the line items that are on there so that you can deal with them. And if you do come across any errors on your credit report or anything that's just completely out of the blue, follow up on it. You can contact each one of the credit agencies, and I'll provide the numbers in the description of this video. You can contact each one of them. They all have a line set up directly for disputes of erroneous stuff on your credit report. So that lets you know how often it truly happens. Now, I mentioned a soft inquiry versus a hard inquiry earlier. So the soft inquiry is you checking your own credit report through a credit report agency service. The hard inquiry is if you go apply for a loan, apply for a charge card at a store, apply for a mortgage or anything of that nature. That is a hard inquiry when it's done by a third-party agency or by a company that you're applying for credit with. Typically, when you apply for credit and it's a hard inquiry, it can reduce your credit score by 5 to 10 points per inquiry. So it is very important that you do not use a credit inquiry of this nature to check your credit score. I know many people have done that in the past and just say, well, I'll go apply for a new credit card every 3 months, or I'll apply for a credit card every 6 months or so, just to see what my credit score looks like now, to see if they would get me a higher credit line or higher balance and things of that nature. That hurts your credit score each time you do that. And if you do it in a quick, rapid session, let's say you do it in less than a month, you apply for 2 credit cards, a few store credit cards, a car loan, and things of that nature, it will literally start tanking your credit score. You can see your credit score drop just by applying by anywhere from 75 to 100 points, just by applying. Not by missing a payment, not by falling past due or anything like that, but just by applying for credit too often. The next thing I advise that you do is once you have your credit report and once you're able to go through it, pick out all the balances on there that are easy to bring current. If you find something that's on there that's past due, you have several balances. If one of them is $50 and the other one is $800, go ahead and pay off the one that's $50 completely before you even touch the one that's $800. Pay that one off, work towards the larger balance, but it does show better on your credit report when you're able to eliminate a line item completely as opposed to just paying it down and bringing it current. However, if you are able to bring everything current on your credit report, I advise that you do so. Bringing it current will show the creditors that you are making your payments and that you have the ability to make your payments. That's really the most important thing that they're looking for. The credit agencies really want to gauge that you have the ability, the credit worthiness to make your payments in the future and to make them on time. So if you're able to bring everything current and show that you're going to be able to make a payment history going forward, you will see a significant rise in your credit score in a very, very short amount of time. The next thing you need to do, once you bring everything current, make future payments on time. Now, whatever you need to do to remind yourself to make these payments, whether it's setting a reminder through Alexa, having your neighbors stay on top of you, or put it on your calendar every day. You hear Alexa? I shouldn't have said her name. Nonetheless, do whatever you need to do to remind yourself to make those payments and make them on time. If you can, do not wait till the day the payment is due and submit it online at 5:59 p.m. Many companies have a shut-off at 6 p.m. Eastern Standard Time, and if the payment is received after 6 p.m., they will consider that late and it will roll over to the next day. So it will penalize you in that respect. The next thing you need to do is, once you get everything caught up on your credit report, do not max out your credit limits again. Make sure you maintain a low credit balance. If you have a credit limit, let's say of $4,000, $6,000, or whatever the case may be on a credit card, make sure you keep that balance as low as possible. If you can keep it under $100, that is great. Having a balance on there shows that you're able to make payments and that you're able to manage your credit. So I always advise, if you're rebuilding your credit, maintain a small credit balance on a credit line. So I advise, if you have a credit line that says has $6,000 on it, maintain a balance on there that is very small and something that you can take care of on a very, very quick basis, on a regular basis, such as buying gas for your car or buying groceries. Pick one item like that on there, and if it's $50 that you're using every 2 weeks, every week to buy gas, or $200, whatever it is for gas or groceries, put that on the credit card so that you know that you can pay that off as soon as you're putting that on there. Having a habit of putting it on there and paying it off quickly as soon as you put it on there shows the credit agencies that you are able to make your payments, make them on time, and make them easily. That's what the credit agencies are looking for, and that's how they determine your credit worthiness. The ease and the ability of you to make your payment. It's not to say that if you have a $6,000 credit union limit that you have to use the full $6,000 in order for you to show that you can make it. You're not keeping up with the Joneses with your credit cards. So have that $6,000 limit, have a $1,000 limit, or whatever you need, but just put on there only what you can pay for at this current moment in time. That will be so influential in helping you rebuild your credit very, very quickly. The next thing you can do is you can become an authorized user on someone else's credit card. So if you have someone that you know, someone that you trust, a family member, or possibly even a spouse that may have a significantly good credit score, something that is much better than yours, and you know this person is good about paying their bills on time and take care of all their responsibilities well, you can approach them and ask, hey, can I become an authorized user of your credit? I'm trying to, reestablish my credit, trying to increase my credit score. I know you do things very well financially. Can you put me as an authorized user on your credit just so that I can tag along with you? This is very, very beneficial to you, and it will help increase your credit score because you will receive credits as they're paying their bills on time. Now, you're not asking them to give you a copy of their credit card or request a second credit card to give it to you, although a second credit card typically is sent out. That person that is the primary on that account can take that card, cut up, do whatever they want with it. The most important thing is that you are attached to that credit account. You're not a co-signer. That person is not a co-signer for you or anything like that. You're just attached as an authorized user so that you're able to gain the benefits of when that person is making their payments and making their payments on time. Just an added benefit to you, and that's a quick way to help you increase your credit score as well. The last thing and the most important thing that typically hurts everyone is student loans. Student loans are such a major part of debt for everyone out there. So I always advise, do your best to stay away from forbearance and deferment. It says that they're not supposed to hurt you when you go into forbearance and when you have a deferment and things of that nature, but it can hurt you. And I know so many websites say it doesn't hurt you, and I believe Experian's website even says that it does not hurt you. And it's not the deferment and it's not the forbearance that actually hurts you. It's the way that the company or the loan company, whoever it is, it's the way that they authorize and classify that deferment and forbearance on their end, and then until reported to the credit agency. So you may be in deferment with them or you may be in forbearance with them, but they could internally classify it as an inability for you to be able to pay. And if they feel, yeah, we'll give this person a forbearance, and listen, you won't have to pay for 12 months or 6 months, whatever the case it may be, the agreement that you come up with them. But behind the scenes, they may say, well, they're doing this because of an inability to pay, or they've done this 2 consecutive times in a row in a 2-year period, or 2 consecutive times in a row in a 12-month period. So now we're going to classify it as an inability to pay. That will affect your credit report because it will show that you're not paying each month that is going on there. Yeah, the company is saying, the student loan company is saying that, yeah, this person is in deferment. When they're talking to you on the phone, they're gonna say, yeah, you're in deferment, everything is fine. You don't have to worry about anything. Your next payment is gonna be blah, blah, blah in the future. But at the same time, they're talking to the credit agency and saying, this person is not paying. They're not giving us a payment. They have an inability to pay. So that's something you should be very aware of, and that's another reason why you should check your credit report often, regularly, not too often, but regularly, just to make sure that there's no shenanigans or anything taking place with this. Under the CARES Act that was passed during the economic stimulus, one of the things that was available to everyone that had federal student loans was the ability to put your student loans into forbearance. Now, Great Lakes, one of the largest student loan companies out there, did this for everyone, but they accidentally used the wrong option in forbearance internally. So it classified the majority of those individuals as having a late payment over and over and over again thus far. So be sure to go through, check your credit report, especially if you took advantage of this forbearance through the CARES Act and you were a loan holder or recipient from Great Lakes, just like I was. from Great Lakes for my student loans. So check that, make sure that you didn't fall into that category. Now they're saying there is a workaround. They're going to work with the credit agencies to get everything prepared for your credit report, but you don't want to trust it. Your credit report is not their priority. Your credit report is your priority. Your financial health is your priority. So you have to take control of that, and you have to take the lead of it, and you have to make sure that everything is reported accordingly and reported in good standings. If you have any questions about anything that I mentioned today regarding your credit report, please reach out to me. Leave a comment below. I do my best to answer all of my comments. And before you leave my channel, I ask that you please hit the subscribe button, ring the bell so that you can get a notification each time I upload a new video. And please, please, please like and share this video to help me increase the financial literacy of our globe. Thank you so much and have a great day.